Let's first talk about the curbs that Sebi is setting on F&O trades on the retail side. Sebi member Ananth Narayan is saying that trading in index options close to expiry sometimes resembles a slot machine in a casino, with individuals hoping to hit the jackpot. It brings back the spotlight on the concerns that Sebi, the market regulator, has around F&O and the kind of impact that retail activity in F&O, in futures and options, what it does to the markets. My colleague Anurag Joshi has been at an event where some of the management of Sebi was speaking, and this is about the kind of trading activity we've seen in futures and options in India. My colleague Anurag Shah joining us to walk us through what Sebi is saying about the kind of curbs that they are putting through. Anurag?
Recently, Sebi came out with a study on intraday cash segment, which suggested that 7 out of 10 people are making losses in intraday cash segment. But Sebi has clarified that they have no intention to curb intraday cash segment volumes. On the other side, on a consultation paper on F&O, Sebi will consult with all the stakeholders, because a few stakeholders has raised the concern that people may shift to dabba trading and commodity. So Sebi has mentioned that these are the concerns raised by a few stakeholders, but before coming out with the final rules, Sebi will concern with all the stakeholders. One of the concerns Sebi has raised that increasing volumes. So in index option, the volume got up by 12 times, from 11 lakh crore to 130 lakh crore, which was a concern, as compared to the cash volume, which has gone up by only 2 times. But in index option, volume had gone up by 12 times. So this was a big concern for Sebi, and one of a major reason Sebi came up with a consultation paper on F&O. Sebi also think that trading in index option closer to expiry is like a slot machine in casino. So that has created some sort of a concern for Sebi, and market stability also get questionable on the expiry day because of the increasing volume. But before coming out with the final rules, Sebi will consult with all the stakeholders on the consultation paper issued on F&O segment.
Yes, it's a consultation paper. These are proposals that have been put out, but long extended conversations happening about these proposals. Feroze Azeez is joining us for one such consultation of our own, the Deputy CEO at Anand Rathi Wealth. Great to have you as always, Feroze. You know, there is this mention of dabba trading, which we know it's illegal. For this kind of trade, you don't go through the stock exchange, you bypass it, you don't need a demat, a trading account, you don't need KYC. And the big downside is that it exposes a person indulging in this kind of trading, dabba trading, to a lot of risk. How real are the concerns, Feroze, by putting these measures that Sebi is proposing to contain individual F&O trades? These retail traders will move from formal trading and opt for informal channels like dabba trading is something that is being talked about, or they may even move to gambling sites is another thought. How real is this concern?
I think the concern is not real to my mind. With anything which cannot be measured, you can't change, you can't measure the change in it. Today, what is the extent of dabba trading? Nobody knows. So it's generally a matter of perception of what was the dabba trading and what did it increase to, right? If you say that there's going to be growth of dabba trading, somebody has to have the base. Like if I say that GDP is going to grow, I know my last year GDP, then I can say this is the growth. So that's always going to be something which we'll have to debate in English, whether it went up or low. Point one. Point two, I think India has provided several different, over the last one decade, there's been an evolution of several places where adrenal rush could be addressed. Be it the cryptocurrency, which is there in the market, the price movements there are significantly larger than an equity index, for sure. So the point I'm trying to make is there are other sources for a person to get this thrill. Like you were saying, it's like a slot machine. There are several other, there are gaming apps today available, which was not the case 10 years back. So I'm not too worried that Sebi has to think about dabba trading increase when bringing in regulation or protecting the investor interest. So I think Sebi is doing it just right, and the measures are very calibrated. If you look at the increase in the contract value to 15-20 lakhs
Yes.
is exactly where it was just 6 months back. For example, the Nifty futures had a lot size of 75.
Correct.
Now it has become a lot size of 50. So SEBI had anyways reduced it just about 4-5 months back. So a marginal increase in the contract value is not going to impact so much.
But
Because
SEBI is talking about this
contract
expiry
value
day
is not-
frenzy. Feroze, SEBI is talking about expiry day frenzy, that markets get volatile, they get very unstable. We know this. When trading in index options, it's almost like slot machines in casinos, like they are saying. I believe more than 90% of trading volumes in the index options occur on expiry day, and most of it is in the last hour. So how important is it for the markets to control this with the kind of measures that they plan to bring in?
Yes, I think that's the nature of the instrument.
Exactly.
Like you rightly said, from an option buyer's perspective, it is clearly a slot machine. From an option seller perspective, there's a 99% probability that you will win. Now, for example, let's assume Nifty is at 25,000, like you were stating, it touched 25,000. On the expiry day, in the last 1 hour, if you sold an option, call option of 25,500, which is 500 rupees more, right? And you get 1 rupee for it. From a seller's perspective, the buyer is paying a rupee, a seller is getting a rupee, 500 points of Nifty. So it is very unlikely that Nifty in the next 1 hour will go up 500 points. So if it so did, the 1 rupee buyer can make a killing. But the probability of winning for the 1 rupee seller is near 98-99%. So if it is a slot machine for the buyer, it is a casino owner position for the seller as well, where his chances of winning are high. So net, I am very happy that SEBI is trying to curtail the retail participation, because in the future and currently also, algorithmic trading and AI is going to transfer significant portions of wealth from retail to institution, because an institution can afford spending crores on writing algorithms using AI to beat the system. Not beat the system is the wrong connotation, but I think to capitalize on the opportunity of retail being lesser informed.
One look at it like this, that when you raise the barriers for retail trade in F&O, by raising the cost, by increasing the complexity, isn't there a good chance that these traders will move to the cash segment, where volumes haven't grown substantially in recent times, have they?
Yes, I think, yes, you're absolutely right. If derivative gets curtailed, intraday cash market trading will go up. And I think that is far more important. See, firstly, SEBI brought in expiries on every day practically, right? Earlier, there used to only be a Thursday expiry, and both Bank Nifty and Nifty would expire on Thursdays. Then it was spread. Now you practically have Monday, you have an expiry of mid-cap on NSE, you have Tuesday, you have Fin Nifty, Wednesday, you have Bank Nifty, Thursday, you have Nifty, and Friday, you had Sensex, if I got the days right. If a person gets 5 expiries in 5 weeks, it's as good as a full-time job. If I have a 5 lakh rupee margin in my account, or even 1 lakh rupee to buy options, then I have work for all 5 days, because there's an expiry of a different index. But the more important thing from a regulator standpoint, this, like you rightly alluded, this can improve the intraday trading volumes in the cash segment. And there we have very low volumes. You see a stock, which is a 300 largest stock, will trade not even 0.1% or 0.3% of its total market cap in a day. So I think intraday volumes are needed, and it's significantly lower than other developed markets. I think if this is the collateral benefit of curtailing futures and options, results in them moving to intraday and not the DABA trading, that will create a huge benefit to the impact cost to ABC, which might shrink over the next few years.
Is it going to be these measures, Feroze, that is really going to help investors and traders in the future? What will it take to guide them from the lure of quick short-term gains to diversified long-term investments like mutual fund SIPs?
See, I think the hypothesis that these are unique, mutually exclusive sets. Whenever I hear somebody, they almost think that they are two mutually exclusive sets. It's not like that, right? The guys who are contributing 21,400 crores to an SIP might intersect with 70% of these option traders, right? Maybe those 30-40% are just doing gambling. or maybe high probability or low probability derivative trades. But I see, when I meet people, I see both of them being the same person in most cases. So a person who makes long-term investments, takes a little bit of money, takes a little bit of risk, and tries to quenches his thirst for excitement. If this is the case, then the person is on the right path, because you also want some dopamine for your mind. And that's what it produces. Gambling produces dopamine in your mind. But the same guy, if he's using SIP, then I'm very happy. So I think the most important study the regulator should do, if I were to be the regulator, if they've not already done it, I'm sure our regulators are very, very sharp. What is the intersection between mutual fund investor and derivatives exposure? Then if you see and study the proportions of mutual fund assets, because both of them have a PAN number.
Yes.
If you could check what is the value of a certain set in mutual funds and the margin in derivative, we'll have a sense of how much percentage of their wealth are people gambling with.
So that correlation you imagine is
fund
going to be important. That data set is going to be an important piece for really charting the course in terms of F&O activity, how much you need to kind of curb and how much you need to allow. But if the argument is that for a market to thrive, you need all types of people. You need investors, you need traders, you need your FIIs, you need DIIs. Doesn't restricting retail activity work against the basic principles of a free economy, Feroze? Isn't investor education the answer rather than putting in these restrictions?
See, if the restrictions are irrational, I completely concur with you that education is the only solution. If there are restrictions are incremental in nature, not disruptive in nature, then it is actually a very good thing to do. Nike, if today you are speaking of STT increase, it's not so dramatic that it will cut out most people. So I personally think it all depends on the regulation. It depends on the extent of regulation. If it's incremental, it's very good. If it is disruptive, then it may not be good. If there was a situation where you are completely restricting a certain group of people, then there is a problem. Today, what are we saying? Today, even if the options contract value goes up, a person can buy an option at 30,000 rupees, add the money on Nifty, which is the largest index. Now, 30,000 is not such a large amount. You don't want a 5,000 rupee guy to gamble. You want it to be 20,000. Add the money options, 20 to 30,000 rupees is what the buyer premium needed in the bank account. So I think since these are incremental changes, I look at them very, very progressively. And Sebi has also released simultaneously a consultation paper to the mutual fund industry. And that's today is not being spoken about so much, which is the new product platform, which is not going to be as restrictive as mutual fund.
Right.
And the minimum ticket size will be 10 lakhs. And I think that will address the adrenal of a futures trader may not be the options buyer.
You know, Feroze, all of this is happening at a time that the markets are at a high. And the reason we are seeing this kind of heightened retail F&O trade is because everyone wants a bigger piece of that pie. But we know markets work on greed, they work on fear. How will any sign of any kind of decline in the markets change the very need for these curbs?
Yes, I completely concur. What happens is there is a lot of trading which happens because of fear of missing out, the FOMO. And the greed, I think definitely has creeped in. Of course, if you look at October 21 to 23, October 23, Nifty was exactly the same level, 18,600 to 18,600. In 2 years, market did nothing. The SIP numbers went up from 11,000 to 19,000. I think this time around, you see that there's a difference that SIPs are coming not on the back of greed. Otherwise, it now doesn't explain Nifty being exactly the same level in 2 years, but the SIP number having gone up 75%. So today, I think they're not so novice. They're not so naive, to my mind. I think I'm reasonably thrilled that this change will bring in some degree of more stability. And I can't agree with you more. If markets correct and consolidate for a few months, nothing has been able to do it after the state elections on 3rd December 23.
Yes.
Markets have been on a one-way rally. If that corrects, then I think it will shed a little froth.
Well, some people are suggesting that these valuations look rather stretched, and we'll keep watching out for what happens in the markets. Feroze, it's always great to get in your perspective on important issues related to the markets, to the mutual fund industry. Thanks very much for joining us tonight on India Tonight.